Hey guys, this is Rudy coming at you live from Palm Beach in Florida. It is Tuesday. It is June the 13th. Yesterday, I made a video about energy transfer and compared it to four of its peers in the pipelines industry. And then a few of you responded on Twitter and on our channel asking me or highlighting some other stocks that you might be invested in or that you might be interested in. And a couple of them I didn't really know, so I thought I'll take a quick look and maybe we can chat about some of these pipelines that are of interest to you. They're not necessarily pipelines, but they are energy type related companies. Let's take a quick look and sort of see what we have here as a comparison. So first, by way of a little bit of background here. So I mentioned a few people talked about this on the channel, and Physical World Prefer, cat of an oil baron, cool name, huh? Said, I can buy Energy Transfer. It's because she is located in one of the Scandinavian countries, and they tax heavily on limited partnerships and master limited partnership when they issue those distributions that are so juicy that I'm always looking for. But she says I can buy AM, also pipes, with an 8% dividend. Well, that seems like quite a sweet deal to me. The Joker spoke, or the Joker speaks, and said perfect timing, and then mentions at the bottom here, what do you think of Atlas Energy Solutions, AESI, which distributes sand in Texas and New Mexico? Sand, of course, is one of those commodities that have been very subject to inflation. So tough times for the people in the energy industry, being sort of semi-crushed by some of these inflationary pressures. And then Jay Yun, or Jun, mentioned USAC. Now, this is a company I've looked at a few times, but not recently. So I thought, you know what, why don't I take this sort of little basket of stocks, compare it to my energy transfer that I talked about yesterday, and then just for good measure, I threw in Enterprise Products Partners, which no one spoke about, but is pretty much the same as energy transfer. So the two green arrows here show you oil, gas production pipeline master limited partnerships. Enterprise products and energy transfer are sort of the same, mostly. And then two integrated US oil companies. AM is Antero Midstream, and AESI is Atlas Energy Solutions. And then the sort of odd one out here on the five is USAC, which is USA Compression Partners, which is an oil field machinery and equipment company. So they are sort of similar, but not at all the same. And two of them, respectively, are mostly alike, one to the other, respectively. So let's take a quick sort of, I'm not going to do a deep dive on this. I'm going to do a shallow dive, and then we'll look at the stock ticker symbols and sort of see what the snapshot looks like. And then we'll look at the debt, and I'll wrap it up. The 20-day raw stochastic, for the people who love technicals, shows you that three of these are overbought, and one of them very close to being overbought. That's Enterprise Products Partners. From a technical point of view, if you look at the 20-day raw stochastic, if it's 80 and above, it's overbought. So probably not a good time to get in. The odd one out here is my favorite from yesterday, which is Energy Transfer. The weighted alpha is not much to choose between them. They're pretty much the same. A couple of analysts have moved their sort of opinion. Last month, for example, on Antero, 8% said sell, now 80% say buy. We see the same thing here on USA Compression Partners. 24% said sell last month, now 40% say buy. This is kind of steady Eddie. The sentiment has improved a little bit for Energy Transfer and Enterprise Products, and there's no real opinion on Atlas Energy Solutions at this moment in time. Over the last 6 months, if you invested in these, you're probably okay. You know, I mean, most of them pay a reasonably good dividend. So if you're up 7%, 3%, whatever, and you receive the dividend, and as I do, you invested in more stock as the stock pulls back, you're probably doing okay. So over a 6-month period, it's not too bad. The key statistics are always interesting to me because I compare the annual sales to the market cap, as I did yesterday for Energy Transfer. This is a $90 billion sales company with a market cap of only $40 billion. So the annual sales is more than 2 times the market cap of the company. These other companies are more normal Uh, that's assuming there's a normal when it comes to stocks and trying to analyze them. But if you look at Antero Midstream, this is a sort of $1 billion company with a $5 billion market cap, a $500 million sales company with a 1.5, 1.7 market cap, so sort of 3.5 times. Here we've got a $700 million company, USAC Compression Partners, with a $2 billion market cap, so sort of 3 times there, 3 times there, 5 times there. And then here's another anomaly here. So Enterprise Products Partners is generating about $58 billion in sales and got a market cap of about $56 billion, sort of 1-to-1. The odd one out here for sure is Energy Transfer, $90 billion in sales, market cap of only $40 billion. Over the past 2 years, if you were invested in Compression Partners, Compression Partners, you did okay, 24%. And the sort of runner-up here was Energy Transfer, not too bad. Plus, of course, that big fat dividend of almost 10%. The other three sort of bunched together here, but as a general rule, not too bad. I mean, even AESI, the laggard here, 4% up. So not too bad. So let's look at them individually quickly. So Antero Midstream, this was the cat of an oil baron's pick here, Antero Midstream. You can buy it for $11. Looks like quite a sweet deal. It's a small cap blend company, a $5 billion market cap, positive earnings, got a PE ratio of 16, a little bit rich, so we want to be under 15 for sure. But there's not much in it here, so it's no big deal. Obviously, massive dividend, paying almost $1 on an $11 stock, so it's 8%. So that's pretty good. Outperformed the indices easily over the past 3 years. Gee, what a great performance here. Sitting slightly to the right here, so on the high side on its 52-week range. So maybe now is not a good time to buy into it, except for the fact that, like, if you're already long in it, you obviously want to hold it. But if you're looking to buy into it, maybe you can pick a day when there's a little bit of a pullback, because there will be one over the next few days or so, and then maybe nibble a little bit, take a small position and see what happens. Other than that, not a lot going on here. But let's look at the financial strength quickly, because this is not a great picture. The debt to capital ratio of 60% is it says it's in line with the oil, gas, and consumable fuels industry. Is actually high. It's significantly higher than the industry, 31% compared to 60%. So carrying a lot of debt, but the company should be able to comfortably repay its debt given its interest coverage ratio of almost 5. Right? So 5 is good, but it's still less than half of the industry's interest coverage ratio. So the industry as a whole has half the amount of debt of AM, but more than 2 times the interest coverage for the most recent quarter. So this is not a very good picture, and maybe another reason why you want to look to see if there's a bit of a pullback on AM before you open a new position. If you're currently in it and you're holding the stock long at about $11, you can probably just stay in it. No need to sell it, no need to exit. Not at this stage anyway. Atlas Energy Solutions Inc., so AESI. By the way, I don't really know these companies other than Energy Transfer. So some of them are new to me, probably as it is to many of you as well. So on AESI, you can buy into it at under $18. It's also a small cap blend. It's got a market cap of only $1 billion, positive earnings, PE ratio super cheap, less than 5. Like I just said a minute ago, we want to be under 15. This one's only at 5. It's also sitting slightly to the right on its 52-week range and trading close to that high. So right, 1895 is currently trading at 1764. Same thing. Maybe if you want to get into it, wait until there's a little bit of a pullback. However, look at the short percentage down here in the bottom of the screen in the middle. This shows you that a large percentage of the shares outstanding, which is about 57 million, is currently short in the marketplace. It's also got a strange looking graph. So when you see a picture that looks like this, then you may want to do a bit of a deeper dive and kind of see what's going on here. I don't know Atlas Energy Solutions, so I'm just looking at this sort of for the first time with you. Its debt to capital ratio looks like quite a sweet deal though. It's only 16.6%. It also says it's in line. It's actually way below, right? 16.6. The industry is at 40 for energy equipment and services. Quick ratio 4.5, exceptionally good. So it's got a lot of cash. on hand, probably has good cash equivalents as well, inventory, investments, etc. I'm not sure. Interest coverage 21 times. The industry is only at 10. So this is a good picture. Not a lot of debt, a lot of cash. Maybe they want to deploy some of their cash and make some acquisitions or look at a merger or something like that. I'm not too sure because, as I said, I don't know the company. In fact, I don't know it at all. Never mind. Well, US Compression Partners, so USA Compression Partners, you can buy it for $20. It's a $2 billion company. So once again, we've got a small cap value company here. Big dividend, $2 on a $20 share is yielding over 10% on an annualized basis. Negative earnings, also sitting sort of slightly to the right. No one's shorting this thing. The short interest is very low, and it's comfortably outperformed the indices sort of over the last year or so, certainly since 2022, January, it started separating itself from the indices as a benchmark or comparison. So let's look at this one's financial strength. This is horrible. USAC is one of the most highly leveraged companies in the energy equipment and services industry and has a debt to capital ratio of 87.5%. That is just not a good picture at all. In fact, just at a glance, just looking at this snapshot and using it as a benchmark almost entirely, I'd be uncomfortable getting into USAC with a debt to capital coverage ratio. This is not a good ratio at all. The industry is at 40, they're at 90. This debt to capital ratio is a concern. The quick ratio is horrible. They only have half the cash available to pay their very near-term liabilities. In other words, the accounts that are payable within the next 30 days or so, they're short. They may have a lot of inventory. They may have investments. I don't know because I haven't looked at the balance sheet. And the interest coverage is just 1 times, right? The industry is at 10. So this company could face trouble servicing its debt, given its interest coverage ratio of only 1.3. This is not a good picture at all. My recommendation is to stay away from USAC. Enterprise Products is a sweet company. Right now, it's probably not the perfect time to get into it. $26, sort of trading on the high side. It's a $56 billion company, so it's a large cap value stock. Positive earnings, PE ratio is good, 10. So this looks all good. The dividend is nice as well. It's $2 on a $26 stock's currently yielding 7.5%. And also you don't get a lot of shorts here. It certainly outperformed the indices over the last couple of years or so. Over a 3-year period, it came from behind and then overtook the indices respectively to end up where it is today. So Enterprise Products Partners in this particular example is a winner. How about its debt? It's 50%. It's sort of similar to what I shared yesterday on energy transfer. Also, it says it's in line with the industry, 50%. The industry is at 31, so it's obviously above. But the difference here is that even though it only has slightly less cash on hand to pay its current bills, it has an interest coverage ratio for the most recent quarter of 8.5, which is pretty good, even though the industry average is at 11.75. This is pretty good. This company, Enterprise Products Partners, along with Energy Transfer, would be winners for me. So in a nutshell, that was kind of 3 that you had mentioned for me to take a look at. I think Antero would be an interesting play at $11. I think the sort of safe, steady 80 bets are Energy Transfer and Enterprise Products Partners. The other 2, they don't really make me feel warm and fuzzy. So that's my view, guys. If you have any comments on that, or if you are long in some of these, or if you're thinking of opening a position or something like that, you can let us know in the comments, and we'll go from there. So thanks for watching. Take care. Bye-bye.